Welcome back to the Malaysia Money Matters show. It's the 11th of December, 25.
Great to be here. This week, we're trying to connect the dots on a lot of different signals. We've got corporate earnings, some big project delays, and a really, really huge legal victory.
Okay, so let's unpack that, and let's start with the project delay. The LRT3 Shah line.
Mm-hmm.
It's missed its December 31st operations target. And we're talking about an indefinite delay here, apparently because of 33 software glitches.
Yeah, that's a tough one for commuters.
Mm.
A real blow. But there is a crucial silver lining here, financially speaking.
Oh.
The whole project is under a fixed-price contract. So what that means is the government won't be on the hook for any extra costs from this delay. The budget is, well, it's insulated.
Okay, so fiscally it's contained, but what about the opportunity cost? I mean, for businesses and everyone just waiting for that line to finally open, that's got to be huge.
Oh, that's the real question, and it's a definite hit to productivity.
Yeah.
But on the flip side, confidence in the private sector seems to be just flying high.
Right.
Just look at the corporate announcements. Eco World Development Group, they reported all-time high earnings.
And they raised their 2026 sales target to what, 4 billion ringgit?
RM4 billion, exactly. And a huge driver for that is their industrial property segment.
So this is more than just residential sales.
Much more. They've closed major land deals with giants like Microsoft and a Google affiliate, Pearl Computing. It really shows Malaysia is cementing its place as a top spot for data centers.
And that growth story is sort of mirrored at Gamuda, right? Their Q1 net profit was up about 5%.
It was. They're leveraging strong domestic construction, but also their quick turnaround projects in places like Vietnam. Eaton Park is a big one.
That model seems to be working for them.
For sure. It's stable enough that they declared a steady 5-cent interim dividend, which is always a good signal to shareholders.
Speaking of clear signals, let's talk about DKSH Holdings. Their shares hit a decade high.
Yeah, that was off the back of a privatization offer. RM 6.15 per share, which is a pretty nice 16.7% premium.
So for minority shareholders, this is a good exit.
It's seen as a very fair and timely one, especially since the stock has low liquidity. It can be hard to sell large amounts without affecting the price. So this is a clean way out.
And quickly, on another debut, the medical devices firm LAC Med.
A marginal gain on its first day, but their eyes are already on Indonesia. They're expecting profit margins to be 4 or 5% higher over there.
Okay, let's pivot to policy, because this is where I think the biggest news of the week landed, the Sulu case.
A landmark victory. Absolutely.
The Paris Court of Appeal just annulled that so-called final award of nearly 15 billion US dollars.
Completely. Threw it out in its entirety. The court found that the arbitrator just didn't have the jurisdiction to begin with.
Wow.
Not only does it cancel that staggering claim, but the claimants now have to pay Malaysia 200,000 euros in costs. It's a massive win for national sovereignty.
And it seems like this legal and policy stability is paying off. The National Semiconductor Strategy has pulled in almost RM 55 billion in investments?
RM 54.9 billion,
Yeah.
And it's created over 25,000 jobs. That's just in the first half of 2025.
We also saw some responsive governance on the labor front.
We did. The Human Resources Minister announced the cabinet is dropping that contentious RM 10,000 penalty for employers in the Employment Insurance System bill.
So they're pressing pause.
They're postponing it to really address the industry's concerns, which is a smart move for SME stability.
And staying on domestic matters, we had that statement from the Selangor Sultan.
Right, Sultan Sharifuddin Idris Shah. He voiced some concern that states pushing for state rights shouldn't overshadow the bigger national interest. A call for cohesion, really.
A reminder about the stability of the union. Okay, let's look internationally for a moment. The U.S. labor market.
Some good news there for inflation watchers. Labor cost growth slowed to 0.8% in the third quarter. It's a positive sign, but tariffs are still keeping overall prices a bit high.
And on the geopolitical front?
Things are still tense. Fighting between Thailand and Cambodia has flared up again, which led Cambodia to pull out of the CA games over security concerns.
And the IMF had a message for China.
A pretty direct one. They urged China to make the brave choice to boost its own domestic consumption instead of relying so much on exports to help ease some of those global trade tensions.
So when you take a step back, what does this all mean for you? We've covered everything from local train delays to massive international legal victories.
Well, the thread that runs through all of this, for me, is the importance of clarity and decisive governance. whether that's winning a monumental case like the Sulu arbitration or the government being responsive and dropping a tricky penalty clause for businesses.
That clarity is what drives confidence.
Exactly. It's what defends stability and ultimately attracts those billions in investment we're seeing in the semiconductor sector.
If you found these insights valuable and want more deep dives into the financial landscape, make sure you subscribe to the Malaysia Money Matters podcast.
Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.